start the record. Awesome. So thank you everybody for joining. I am going to start our presentation. If at any time you have any questions, you can put them into the chat. Hopefully I'll see the chat. I'm happy to stop and talk if we need to be able to do that. And also I am going to post my contact info here so that to make sure everybody has it in case you need to connect with me. I love connecting with people and helping you out. So I'm going to put that into the chat. And can you see the screen okay?
Yep.
Awesome. Very good. So fear or fortune, why is now the moment smart investors are taking action? So again, this is an educational series. I am not your financial planner. I'm not your accountant. I'm not your lawyer, but I'm here to provide information that I think is useful and helpful for you as you're starting your real estate journey. So a little bit about myself, coaching and mentoring in a strong team has changed my life. I started passive investing, and actually in October will be 7 years. It's kind of, I was actually driving by the hotel where I signed up for my first mentorship program the last week, and it was kind of nostalgic. So I've invested as a passive investor in 20 syndications and a general partner sponsor in 14 for a total of 32 syndications. A little bit about Massive Capital. So Massive Capital is a vertically integrated real estate company. We're a developer of Class A retail and town centers. We're an owner operator for value add multifamily. This hasn't been updated since our last two small investments, but we do retail and family office, triple net brokerage through our partner Realty One, land development, steel frame construction, and then we do have a mastermind called Massive Masters. We are fairly Texas centric. We have a lot of assets here, but we also have some in Denver, Colorado, Georgia, and North Carolina. So our partners are mostly in the retail space. They have about 300 million in assets, and Massive Capital has a mixture of things. And we're actually now at 220 million, including the two properties that we recently closed. So again, tonight we're going to talk about, we always start off, what is a GP and an LP? We're going to talk about blood in the streets, fear, and the time to be greedy. We're going to talk about taking massive action. We're going to talk about looking for balance of risk reward, and then always are open for Q&A at the end to make sure that I answer all of your questions.
And now, here's someone you want to hear from, our sponsor.
For over 15 years, Skyline Title has been a trusted name in Texas real estate. From first-time homebuyers to seasoned investors, our team ensures a smooth, reliable closing experience every time. Backed by a decade of partnerships and proven success, we take pride in protecting your biggest investment, your home. Visit SkylineHTX.com to learn more.
So I've told my life story before. As a child, I loved to play Monopoly. And I knew that the people that bought properties early and then eventually converted them into hotels won the game. But then I became an adult and I kind of forgot about that. I was interested in real estate, but I was terrified of toilets, tenants, and trash. And so what did I do? And I thought you had to be a millionaire to invest in commercial real estate. So what did I do? I just kept going around the Monopoly board collecting my pay. Now, I did very good. I was a well-paid executive, did really well, but I never ever really started having my money work for me. I was always trading time for money. And so it was super important for me to learn to be able to put my money to work. And remember, as an active, you work for your money, you have a job or self-employment, and it requires time, work, or energy. So when COVID came along and my employer said, well, we no longer need Trevor anymore, that paycheck stopped when I was going around the Monopoly board. Now, I'd already started passive investing in real estate, and that was part of my decision to switch to active. So as a passive investor, your money works for you. You invest your money in money-making assets or businesses, and it requires no time or work for you to be able to make money. So we all know the power of real estate, right? So with cash, you get no cash flow, no leverage, no real assets, no tax advantages. Bonds, you get a little bit of cash flow and tax advantages. Stocks, you get a little cash flow and leverage. But real estate, you get everything. So you get cash flow, you get leverage, you invest in real assets, and then you do get tax advantages that will help you. And again, remember, it's not how much you make, it's how much you keep. So you want to make sure that you are keeping as much of the money as possible. So again, a little summary of what real estate syndications are. It's a group of investors who pool money to buy or develop real estate. Syndications are a way for investors to invest in larger properties that they couldn't afford on their own. So if you remember before, I said, oh, I thought I had to be a millionaire, and now I'm a partner in tens of millions of dollars worth of property. Never, ever in a million years thought I could do that. So how does it work? Sponsors are general partners. They're experienced real estate professionals who organize the syndication, secure the funding, and implement the business plan. So again, these are when I mentioned I'm in 14 syndications. I have a group of people in all of those syndications that help me. I am not by far doing any of this by myself. I'm part of a team, and our team organizes the syndication, secures the funding. So we go out and find the funding for the property. We're the ones that sign on the bank loans, and we're responsible for paying for it. And then we're the ones that are responsible for implementing the business plan. Now, investors, they're also called limited partners, LPs. They fund the project and they actually own a portion of the asset. So super important here for you to understand that as a limited partner, you actually own a portion of the asset. So a little story here I'm going to tell. Let's say I was going to buy a $10 million apartment complex with my team. And so we're going to go out and we're going to find a $7 million loan. So we're going to get a loan to buy the property, but we still need to raise $3 million from investors. So we're going to get people to invest passively into our real estate deal, and they will own a portion of the asset. Now, here's where the beautiful magic happens. So we're doing all of the work. We're responsible for the loans. We're responsible for everything. You're putting in 30% of the capital towards the $10 million we need. So we're raising $3 million. But the passive investors actually own 70% of that asset. It's pretty amazing, right? So that you're the largest owner as a group within it. Obviously, the bank is the largest owner because they have 7%. But you own 70% of the property. And then a lot of our deals have a preferred payment. So you might get paid first before anybody gets paid. So let's say we make $1. Okay. When we make $1, 70 cents of that dollar gets split up by the passive investor. 30 cents of that dollar goes to us as the general partners. But if there's a 7% preferred equity, until you've made 7% on your money, and that's accumulative, so you may not make it all the first year, it may take a couple of years, that split doesn't happen. So when you look at when do we pay, the lender gets paid first, the passive investors get paid second, and they actually are higher up in the capital stack with a preferred. And then us as the general partners, we're the last people to get paid after everybody else has been paid. So it's a real investor-friendly way to do it. So the benefits are that you're protected, your personal assets belong other than the investment. So I want to be honest, if you put $100,000 of this $3 million in and the deal goes terrible and we end up really doing a bad job and losing people's money, you can lose your $100,000. So I want to make sure that I'm clear that people understand that. Our goal isn't, because again, we want to get paid too. We're doing this to make money. You can also do specific projects, right? So, I mentioned I was a passive investor in a lot of projects. So I'm invested in multifamily. I'm invested in land development. I'm invested in retail. I'm invested in a medical center. I'm invested in a new build storage. So I can be in a bunch of things that I'm not the expert in. So we partner up with people that are experts in the retail space. I'm not an expert in the retail space. I'm certainly learning a lot. And I got to make sure that I understand the investment if I'm going to ask people to put their money in. But anyways, but it allows you to do that. And then again, all the returns are tied to the direct of the project. So when we are doing a syndication, we are actually selling securities. And there are two main exemptions that we use. And one exemption is called the 506B, and the other exemption is called the 506C. So we always start our deals as a 506B. And the beauty of a 506B is you do not have to be an accredited investor to invest. Before this happened and they made it these simple rules, you were only allowed as an accredited investor to invest in these institutional investments. But now as a 506B, we have to have a pre-existing relationship. You have to be considered a sophisticated investor, and we help you with this. That's why I do these webinars on Tuesday. That's why I'm always doing calls with people to make sure that you get educated to, to the point where you feel that you are a sophisticated investor. Now, there are only 35 non-accredited spots in a deal. And so what we do is we try to make sure that our community gets first access to these deals. So again, if you remember, if I'm raising $300,000 and everybody puts in $50,000, that's 60 investors. I'm not going to be able to fill it with non-accredited investors. This is kind of a safety valve that the government's put in here, that I can't just keep unlimited numbers of unaccredited investors. And then what we do is we normally switch our opportunities to a 506C. Now, why do we switch it? Because we can market it. At this beginning stage, I can't market it. So if I had a deal tonight, I can't talk about it here. Even though I do know the few folks that are on this call, these get uploaded on YouTube and it goes public. So I cannot talk about a 506B in any public format. But when it's a C, I can talk about it everywhere. I can post it on my Facebook. I can post it on my LinkedIn. I can send it to people I don't know, but only accredited investors can invest. An accredited investor, somebody who has $1 million in assets, excluding their home, an income of over 200,000 as an individual, or 300,000 is married. And again, there are no restrictions on soliciting, so it's the biggest available market for me to talk to everybody. So again, on our database, we have about 14,000 people, and only about half of those I have an existing relationship with. So when I have a deal, I can only send it to the people I have the relationship here. And if we don't know you're ready and wanting to invest, we may not send it to you if we don't know you, and you may miss out on the opportunity. So if you're interested in getting on and you're not an accredited investor, all you do is say, Trevor, I want to become an investor at some point. It doesn't mean you've committed to me to invest, okay? All it means is I'm going to send you a note and say, hey, I've got a new opportunity. Here's the basics of the new opportunity. Here's a webinar for you to come. You come to the webinar. If you can't make the webinar, I'll send you a recording and let's set up a call to talk about it. Does not mean that you have to invest. So our last investment, for those that remember, I never got to talk about it on our Tuesday call because we filled the raise really quickly and we never switched from a B to a C because we filled. So it was an RV park in Ada, Oklahoma. And it had about 88 lots, and we're going to add 40 lots over the next 3 years. That particular opportunity was producing about a 25% internal rate of return. It was a pretty good 2.65 multiple of your money. So again, the goal is if you put 100,000 in it in 5 years, you would have got 265 total. And it had a nice cash flow to it, an average of about 11%. So it started out about 6%, and it went 6 or 7%, and then it went up, but it cash flowed pretty quickly. These are the main partners. This is their motorhome. They actually don't park it there. Well, they're going to visit and park it there for a while. So again, we bought it for $3.6 million. This particular one, because there was a lot of upgrades and things we needed to do, we were raising $2 million. We actually had $2.5 million commitments in 14 days. Actually, 2 deposits came in on the same day, and we had to send half of them back because we actually ended up with $100,000 more in our bank account we needed. And so there was 2 $100,000 investors. So we said, listen, it's a tied race. We're sending you each 50,000 back. And so we never got to switch it to a 506C. So again, if we didn't know each other, you wouldn't know about this investment. And again, remember, if you don't find a way to make money in your sleep, you will work until you die. Very powerful thing. So I always like to talk about this. This is how your money can grow. So we all know that real estate uses leverage. And then we talked about how it's a 70-30 split. But this is the power of growing your money investment. So if you were to invest $100,000 and I doubled it, that's assuming we can double it. I haven't taken any taxes into consideration here because everybody's in a different tax scenario. But again, if you invest 100, turn it to 200, you invest 200, you turn it into 4, 4 to 8, 8 to 1.6, 1.6 to 3.2 million in 25 years. Yes, this is very simplistic math because you will have some taxes, you will have some things that you will have to pay. But what I want to make sure that you understand, this is on one $100,000 investment where you continue to invest the original principal and what you earned. This is no new money. So think about how powerful this, even if you ended up paying $1 million tax, you're going to earn a couple of $1 million off of your one investment in 25 years. Luckily, most of you guys are younger than me in the call here, so you've got 25 years. I probably got maybe 15, we'll see. But the way you go through it's super powerful. So again, Charlie Munger, the first rule of compounding is to never interrupt it. So again, interrupting it. A lot of people say, well, I want to start passive investing so I can live off the cash flow. And I understand that. That's something that people need to do. I always just want to make sure everybody understands. Invest 100, earn 100, spend 100. Invest 100, earn 100, spend 100. In 25 years, you'll only have 200. So again, you want to make sure that you understand the power, right? I know we all have bills to pay, we have things to do, but I want to make sure that you understand the power of putting your money to work. And the earlier you put your money to work, the more it makes, right? So if you can only do this for 15 years, if you can only do this for 10 years, the beauty of this is that you always want to keep your money invested, keep your money growing, and if at all possible, reinvest the proceeds. Now, I want to make sure I'm clear too. I'm not saying put 200 in one deal, 400 in another deal, 800 in a single deal. Definitely not saying that at all. Later on, we'll talk about balancing out your portfolio. That's something that a smart investor does. So you would mix and match. And even here, you might want to say, I want to put two $50,000 investments in. I want to put four 50s and then maybe here 400s. Depends how comfortable you are with putting larger numbers into deals. So again, as I mentioned, first rule of compounding is never interrupt it. So you can tell I like Warren Buffett a lot here. So this is Warren Buffett, and this one is to show you the power of compounding money. So if you look at it here, how does Warren Buffett keep making all this money? Because he always reinvests everything. He reinvests his principals, he reinvests all of his dividends, all of his earnings. He is always growing his money. And you can see now, obviously, the stock market's pretty hot. That has helped him a little bit here. But it's a lot of things. It's all about the power of growing your money. So a lot of people right now aren't thinking about investing because they're afraid, right? So why are you afraid, right? What is it? You feel a fear of failure, right? Worried that the new in Denver might not be successful or meet money, right? How many people think, man, I don't really want to invest because I might lose my money. Trevor told me I could lose my money. And that's true, but at some point you've got to kind of get over that fear and say, I need to start putting my money to work for me. You can feel overwhelmed, right? A lot of people hear all these big terms, IRR, ARR, equity multiples, this GP, LP, this, all these things, and you get overwhelmed, right? I don't understand all the moving parts, right? And so I'm just not going to invest till I understand everything. Well, let me tell you, I've been doing this for 7 years. I still don't understand everything. Okay. So you got to relax. At some point, you just got to do it, right? Perfectionism. Okay, well, I'm going to do this and I'll soon I'll be ready, right? I really want to understand this and I really want to understand that. And you have this sort of flawless approach. And what it does is it brings you into this analysis paralysis mode, right? Where I got to just keep understanding and studying everything. And then self-doubt, I just don't know if this is for me. I don't know what to do it. Social anxiety, my spouse, my boyfriend, my girlfriend, my parents, they're going to say you're crazy, right? Because what have they told you? Go to school, get a job, invest in your 401k. And you're going to say, well, no, what I want to do is get a job and I want to start becoming a real estate investor. A real estate investor, who do you think you are? Donald Trump? You're crazy. You got to do all these things, right? So again, a lot of people have that fear, right? That they just don't know what they're doing, and they're afraid that somebody's going to just judge them for it. And then lack of self-efficiency, just I'm not sure I can do it. I just don't know enough to be able to do it. So Baron Rothschild said, when there's blood in the streets, even if it's your own blood, you still need to keep it. Again, my good friend Warren here said, be fearful when others are greedy and greedy when others are fearful. What does that mean? It's kind of like it's an easy statement, right? What does that mean? Well, when everybody's greedy, there's been a lot of greedy people lately. And then all of a sudden now they're frozen, they're afraid. And this is a time where a lot of people are fearful. We talked about that earlier. And now is the time to be greedy. So let's talk a little bit more about Warren Buffett's in the housing sector. What is he doing? So introduction over, Warren Buffett's philosophy, the view of Berkshire Hathaway, Warren Buffett's investment philosophy, long-term focus on sectors with strong fundamentals, right? Warren Buffett doesn't own tons of companies. He doesn't make tons of investments. He really looks for a long-term focus on sectors with strong fundamentals. Well, back in 2023, not too long ago, he invested about 814 million. He targeted these particular companies, and he actually sold his stake in D.R. Horton. He kept some of his stake in these companies, but he invested a lot of money back in 23. And that's right, move with caution, exactly right. And so he sold all of these investments. But what has he done this year? Okay, he's doubling down. In 2025, he's invested nearly $1 billion in Lennar, and he's back in D.R. Horton. Why is he doing that? He is convinced that he has confidence in the housing market fundamentals. Most of these properties that they're building are build to rent communities. So they are single family rental. It's not a space that I've done a lot of investing in. But again, the fundamentals, if you remember last week, or 2 weeks ago, we talked a lot about that whole session was about the fundamentals of multifamily, right? That there was some distress, but the delta between mortgages and rentals has never been greater. So again, they highlight the long-term growth potential despite market fluctuations, emphasis on stability and growth in the housing sector. So conclusions, I sort of said these already, this kind of duplicate, right? Long-term potential despite it, emphasis on stability and growth in the housing sectors. He's very, very bullish in this, right? What kind of other lessons can we learn from his strategy? What does anybody have anything? You feel free to unmute yourself if you got a thought. If you don't got a thought, that's okay. I like to try to get some people commenting if you can. What do you think? Casey's unmuted herself. She's ready to give us wisdom.
Yes, and also my dog stopped barking, so fortunately I can say something. So I really liked when one of his initial quotes was to make money while you sleep,
Yeah.
and or else you're gonna work until we die. Or you're gonna work until you die. And I thought, oh my gosh, that's just so brilliant, and I want to start doing that right now, I feel like it would make sense as a smart investment, not only now, but forever. And exactly while you sleep, you're making money. I would love that.
Yeah,
I would
it's
love
super
that.
powerful. It really is. And I was doing it, I was working long and hard. Now I did well. I got very well paid, but at the end of the day, if I had, that chart I showed you, right? If as a 30-year-old man, I had have invested in some real estate things now, the 25 years would have passed, right? I'm in my 60s now. It would have been life-changing, absolutely life-changing, right? They say the best time to plant a tree is today. The next best time is 20 years ago. So again, don't wait to buy real estate and wait. Real estate is a waiting game. It is not a get rich quick scheme. I want to make sure everybody understands that. A lot of people give you this false thing that real estate's going to make you rich, right? It is going to make you rich over time. Again, if you remember, right, turning $100,000 into millions of dollars, but it takes 25 years to get there, right? So wait is a super important part of our strategy. So again, are you taking massive action? We only have a few months left in 2025. Oh, I got mid-year. I didn't update that one. That was from another one. So it's your 2/3 year check-in. Stop wishing and start doing. I like that statement, right? Stop wishing and start doing. And somebody posted, you have to get out of your way. It's exactly true, right? Because we always get in our own way. So 9 months in, you got to be honest. Where are you with your goals that you set back in January, right? How many people set goals in January? And where are you on those goals, right? I'd set some goals and I'm not there yet, right? I'd set some pretty strategic goals. Am I stuck or closer, further away? Did you know that 80% of people abandon their New Year's goals by February? That's kind of sad, isn't it? And again, I'm not a big New Year's guy, but I have themes for years. And I have themes that I want to do, right? And so most people overestimate what they can do in a day and underestimate what they can do in 6 months. It's really, really, small daily things can make a huge difference. So why are you not moving forward? No clarity. You don't really know what you want, right? Well, I think I want this or I think I want that, but you really don't. So that one is there. Fear of failing. So you don't even start. Well, I'm going to fail, so I don't even start. Yep. And it's right. If someone mentioned there, if you do this, you're going to make a cushion for your children and grandchildren, right? Comfort zone. I don't feel comfortable doing something. I'm doing enough right now. I'm just going to stick with it, right? And then no execution. You're stuck in planning mode. A goal without a plan is just a wish. It's pretty amazing if you think about that, right? Massive. What is massive action? Massive action mean uncomfortable moves. Call that risk, that new deal. Constant execution, daily decisions, not big one-time events, right? I can't stress this enough. When I get overwhelmed. So if I make some big thing, I really do suffer from procrastination. But if I break it down into a series of daily decisions, right? I'll be honest, part of me wanting to do these meetings is I got to be prepared. I've got a schedule, I've got a timeline. I start working on these a week, well, 2 weeks before. I always set the topic, and then I spend some time and I actually build these thoughts over the course of the whole period, right? Falling forward, learn as you go. Don't wait until it's perfect, and invest in yourself, your skills, your network, and your assets, right? I cannot stress this enough. Invest in your education. You can't keep dipping your toe into the water and expect to make waves. We got a lot of good sayings tonight, right? So think about it. Dip your toe in the water isn't going to make any waves. So smart investors are doing right now. Don't wait for the perfect time. They create it. So again, yes, it's challenging, right? It's very challenging right now. You got to look for the right time to be able to do things. Warren Buffett, again, we already mentioned that. Many real estate investors ramp up in Q3 to prepare for year-end gains. So a lot of people, it's very common. So when you're doing bonus depreciation, when you invest in a deal, you can invest all the way till the end of December and you get the full year benefit of bonus depreciation. So a lot of people, after they do their taxes at the beginning of this quarter, they start doing some of their planning and they want to make sure. And then obviously we've got some market downturns that are making huge buying opportunities for those with a long time view. Now is the time to pivot, not to pause. So your 9 month set exercise, take 15 minutes, grab a journal or notepad and ask yourself, what were my top 3 goals in January? Which ones have I made progress on? Where am I falling short and why? What 3 bold actions you can take this week to get back on track? Did you know that writing down your goals makes you 42% more likely to achieve them? I tend to do more tasks than goals, but again, if I don't have it written down, I'm just not going to achieve it, right? It's just something that doesn't happen. You still have time. So let's break it down. I actually did the math this morning. Right now, we have 112 days left in this year. Still a lot of time. That's 2,688 hours and 161,000 minutes. So we still got a lot of time. It's quite, you think about it, okay, it's September 9th today, but we still have 112 days left in the year to make it, right? So completely transform your life in that time, or it will slip away. Well, it should have been the next 3 months. See, I took this from an old one that I did at 6 months. I didn't update everything. I updated the math though. It's 112 days. That I know for sure, right? So factors that are driving rental demand, right? Affordability issues. We talked about this in the past. The price of rising home. There's never been a delta. I actually found an article that blew my mind. The largest new renter sector are people over 55. They are cashing out and they are saying, we're going to go and become renters now. It's pretty amazing. There's a lot of urbanization trends, right? We have COVID taught us we don't have to live in the big city. And there's a lot of family dynamics, right? So there's a rise in single person households. So there can be some diverse family structures. I've never heard so much talk about pad split. I don't know how many people know about pad split. I've never heard of it, but it's basically renting out by the bed versus the room versus the house. And again, it's the sign of the times, right? People cannot afford to do a full rental. So they are renting out by the bed, not necessarily. And I knew about it in student housing, but it's becoming more and more prevalent, right? So get accountable. If you need help, DM me action and I'll help you. Let's do weekly check-ins, whatever you need to share progress, stay focused, build a circle that pushes you forward, not holds you back, right? So connect with some people. Proximity is power. You need to find your people, finish with a strong year. Okay, you've got some time. So just share it with somebody who needs a reset. Comment below what your next bold moves are. Let's finish it. Don't wait till tomorrow. You can become what you want to be today. Yeah, co-housing development with 3D homes. 3D homes, I'm fascinated by 3D homes. So I'm going to go on a small tangent here. So obviously I'm in Austin, and Austin is a high-tech place, and there's one of the biggest 3D homes here, builders in Austin. And I've got this dream, and maybe it's my dream and I should have made it a reality, so I'm preaching to myself here. I wanted to do a small, tiny home Airbnb community with prefab homes. And I think the fact that they're 3D printed homes, you can charge a premium for them. And you could rent them out individually for family events, for corporate events. And it's something that I thought is super cool. I need to take action on it and figure out how to do it. So now you guys are inspiring me. So again, and they are definitely more eco and sustainable. And so when you're thinking about what am I going to invest in, I want to make sure that you're always considering what is the risk, what is the reward, what is the timeline, and what is the asset class. So there's a few things that you need to determine. Nobody says to you, hey, I got a risky deal, you want to invest, right? They just don't say that. They always say, I've got a great deal with conservative underwriting. But there are risks. Once you start to get educated, you get a concept of what the risks are, right? So development can have some real risk. If you don't get your entitlement, you get delayed, different things happen, so there's a lot of risk reward. And risk reward isn't often reflected in the returns, but it is sometimes reflected in the terms. And so I've talked about this before. I have a medical investment. It's one of those small, it's like a 18,000 square foot medical in Mesquite, Texas. It's got a little ER, it's got a doctor, it's got a dentist, it's got a few things that are in the area. And it is a triple net lease. So the tenants are responsible for everything. So they pay the insurance. If the insurance goes up, they pay it. Taxes go up, they pay it. If the property needs some repairs, they pay it. Everything gets billed back to them, and it's actually doubly guaranteed. So by the doctor personally and by their practice. Now that one's not a 2 times my money. It's a 1.5 times my money. And there is no upside on that. But I'm okay with that, right? Because I look at that as hitting a single, and we got a baseball analogy coming ahead. And then some other deals may have some more risk and some more reward. time. Now, if you remember my chart, right, I show invest 100, turn it to 2, turn it to 4. The last thing you want to do is have all of your investments coming due at the same time. Now, at the beginning, you may have some the same time. So for example, if you were going to invest $100,000, you may want to invest 50 in something that has a 3-year timeline and 50 in something that has a 5-year timeline. I've got a couple investments that have a 7-year timeline because you don't want all that money coming due at the same time because the market has cycles, right? So right now is a buying cycle, and if all your money wasn't coming due for 2 years, and again, I have that. A lot of my investments aren't liquid right now, and I'm kind of stuck. So you want to make sure that you're balancing out your time. You also want to make sure that you're balancing out your asset classes. So number one, people always ask me, what asset class do I like? And I say the one that makes me money. That's number one. But you want to invest in things that you're interested in, right? So we talked all about the 3D printed homes, so if you like that, maybe you would look for an investment in that just because it's something that's interesting to you, right? You want to learn about it. I like multifamily because I think there's a huge demand for rental properties. There's a big imbalance. A lot of people are out of the thing. We just closed a mobile home park. It was my first time. I knew nothing really about mobile home parks. And I was quite interested that most of what I thought was incorrect. Because I was thinking of an RV park where people were renting by the night. This is one where the minimum lease is 3 months. This is more for traveling folks, people working in the area, people that are nomads, whatever, downsizing, different things. And they rent from 3 to 12 months. So it's a very different class, right? So you've got to understand all the different asset classes just to make sure that you have some opportunities. And then again, I mentioned this before, if we were all a baseball team and I was the coach and I said, all right, no matter what, everybody's got to hit a home run. Just keep swinging that bat. We're going to get, no, we're never going to win, right? You got to get a couple of singles, a couple of doubles, and then all of a sudden this deal comes along and you think there's my home run and I'm going to take it, right? So balance out your risk reward. For those of you that are in the area, these are a couple of events I'm going to. So Thursday, I'm going to be at this event at Heritage IRA this Thursday night. I don't know. I don't see too many folks from Texas on the thing. On next week on Thursday, I'm going to be an event up in Dallas. It's a broker panel. And then this is another mentoring program, RE Mentor, Ultimate Partnering. I'm going to be attending that in Dallas at the end of this month. So I've got a few things where I'm going, but I don't see too many other Texas-based folks on the call. Ladies, if you want to join SHE next Tuesday, Jasmine will be running SHE. Got a little announcement about Jasmine. So Jasmine's been my counterpart in investor relations, and she's actually switching her role around. And so she's going to be moving from investor relations with Massive Capital and running a land acquisition department within our group. So she's going to be doing that. I put it in the chat, so you can also click that link. I see Casey going for the QR code. Hopefully that works too. That's a great one.
I'm already signing up.
And then you want to make sure that you're actively passive, so I keep telling you, oh, you got to be passive, but actively passive means you're learning, right? You're understanding. If you are interested in learning about being actively active, we do these Centurion 3-day expos. Next month it's in Austin, and then it goes to Houston and then back to Dallas. Just let me know if you're interested in learning that. Be more than happy. Right. And so these are the three main partners of Massive Capital. They never took funny pictures, so I made them take this picture. Massive dreams need massive action. And in fact, this is who my first passive investment almost 8 years ago. First two was with Sanjay here. So again, it's a very much a team sport. You're one decision away from a new life. Take massive action. So again, my goal is to help 100,000 people. How I got there, I had a goal of 1,000. I thought that was pretty ambitious. Then I read Grant Cardone's 10X book. And then this year, I also accepted another role. So one of the first masterminds I joined, they're the biggest RIA in Texas. They got about 5,000 members. So I'm actually coaching their commercial passive investing space now. And they decided that my goal needed to go to 100,000 because they were going to really grow their network. So again, I posted in the chat to be able to collect and do a Zoom call with me. I love talking to people. That's the end of my song and dance. Any questions?
Mhm.
Any question? Hillary always wants me to get her like $300 million. She texts me all the time. Hey, can you get to this? No, it's not $330 million. She's doing big deals, that lady.
I do have a question
Yeah.
actually, Trevor. So what I know you mentioned the various deals for multifamily. What is the size or what's the minimum size that you would look at for a multifamily deal? Um,
So
to
we're
invest.
normally looking for 100 units and above.
Okay,
Yeah,
that's
so we're
what I was
normally
curious.
looking for 100 units above. We have
Okay.
bought smaller, and
Mhm.
smaller depends on the area, but we're normally looking for 100 and above. And the reason for that is there's a little bit more economies of scale. You can have on-site management. So we just recently closed a 60 unit in Sealy, Texas, which is outside of Houston. So that's smaller than the normal, but there were some things that made that one a special. So there's not a lot of new development in the area. There's a lot of people moving there. We managed to find a property management company that would, so this was 60 units. If you can imagine, they had one unit used for an office and one unit used for a showroom. Huge opportunity just to convert both of those into rental units. And so we found a really good property manager company that was in town. And all they do is when they have appointments for anything or they need to go to the property, it's like a 5-minute drive. And so we were able to take a unit and put it up back up on the rental market. So that was one that worked really well. Plus, it was 15 fourplexes that were fairly new. So it was a lot less maintenance because there's not a lot of grounds, there's not a lot of things. And then everything is the same. So all of our rehab, everything, because all the units are identical. So there was definitely some efficiencies there. Any other questions?
Not a question, Trevor, but I did watch a documentary on Warren Buffett recently.
Oh,
It was really good. I can't remember if it was on like Prime or Netflix, one of those, but it was
okay. I got to watch that.
really interesting. Yes, good stuff. And as far as investing in multiple different in multiple categories, I guess you would say,
Yes.
as far as the amount you feel comfortable with, I guess everybody's different. Everybody has a different amount of money and a different comfort level of investing. But what is a good amount, like to cap each investment at? What do you think?
Well, so it depends how liquid you are, right? Because it's all relative.
Right.
So on my investment portfolio, the majority of my investments are 50 because I'd rather have lots of different ones. There was one that wouldn't let one that their minimum was 100 and they would only let me in for 75 and I really wanted in the deal. So I did 75. I had another one at 100, but most of mine are at 50. And it's a little bit easier. So just to give you an idea, if the minimum is 100,000 and I have 35 non-accredited investors that will all give me 100,000, it's really hard for me to let somebody in that will only give me 50. Because at the end of the day, I need to finish my capital raise. So what often I'll do is say, well, okay, if you can't come in for the full amount, if you're number 35 and someone else comes in, I'm sorry, you're either going to have to up your investment or I'm going to have to ask you to pass. That's the only kind of thing that I worry about. But when you're an accredited investor, you don't mess up their numbers. So you can do it. But I'll be honest, I'm way more flexible than a lot of groups. I've had some other groups, it's 100,000. No thanks. If you're not interested, you're not literally what someone said to me, you're not the type of investor we want. I thought, okay. I thought my money was pretty good. Yeah, I'd like to find that documentary on Warren Buffett. I'm a big fan. I read a book on him. You know what I was absolutely amazed at? So Warren Buffett was married and his wife wanted to move to California and he didn't. So his wife found him a new lady and they actually send the Christmas cards from both women and him. It's kind of strange.
That was actually in the documentary. I'd never heard of that until I watched it.
Yeah, I
I was
was
like,
like,
oh my
wow,
gosh.
because, and again, I'm sure you've seen Ray's. She said that he would forget to comb his hair if there was nobody there for him. That was her statement. And they were still madly in love, but living different lives, and she wanted to go. And he supports her, and she's and literally they send the Christmas cards from both ladies and him. I think it's because you don't think of him, right? You think of him as your grandpa,
Yeah, yeah, for sure.
Yeah. Yeah. I did watch one documentary where he was driving or it was some sort of thing. He was driving around with a reporter going to like McDonald's order and stuff.
You know, that was in the documentary too.
Okay, so maybe I have seen it. Okay.
Maybe so.
Yeah. Awesome. Any other questions? Man, you don't know what you're going to learn on here, right? Warren Buffett's got 2 girls. Any other questions?
When is the tour of the Vale Apartments, Trevor? I'm sorry.
I'm not sure yet.
Okay, gotcha.
I'm trying to make it happen the 30th, but he doesn't think he'll be ready and he's not sure. So I keep pushing him to just be ready.
Okay, thanks.
Yeah. Awesome. Well, thanks everybody for joining. Come back next week and bring a friend if you enjoyed it. I need to get these numbers up to 20 or more people. It would be really nice. And I hope you guys got some good value. Thanks,
Thank you,
Kimberly.
Trevor.
Thanks for joining. Oh, Kimberly, are you in the San Diego area? Did I see that? Yes. Okay. So I got a friend in San Diego and he's found a really interesting business model. So he's somehow figured out where he's been finding duplexes that are on unusual lots, large lots, and he's been able to do double, triple ADU duplexes on the back. So he finds a duplex with a long, skinny lot that's zoned multifamily, and he's adding 3 duplexes on the back. Now they're small; they're like 580 square feet each side. So
I know where there's a couple. I actually know where there's land available to do something like that.
Yeah, and so he's taking a place that has, just a duplex on it, and he's adding 3 more duplexes. So a total of 8 dwellings on one property utilizing the ADU laws, which I was blown away that he could get away with that. And again, they're small, right? They're 580 square feet each side, 2 bedroom, 1 bath. They're small units. But people that wanting to live in the city, it's
Exactly.
it's super powerful.
Yeah.
Well,
There's actually land right now that's available for stuff like that. And there's,
awesome.
like I said, there's multiple multifamily units that are up to be transferred of ownership.
Yeah. Awesome. Well, thanks very much for joining. Nice to meet you.
Likewise.
Keep in touch. Take care. Thanks, everybody.